It varies from market to market. In LA, the the affordable rental housing here was built out right after World War II. It is, if you drive around Los Angeles, you see a sea of two-story, low-density, courtyard style walk-up apartment buildings that were built in the 50s, 60s, and 70s. And the other thing that you see here is that they're smaller assets. I think 85%, 90% of the rental housing stock here in Los Angeles is 50 units or less. A fraction of the size of the typical apartment building that you would have in almost any other major US market, like an Atlanta or a Dallas or a Phoenix. And so that therein lies the opportunity. There's very little institutional ownership of these assets here in Los Angeles. Instead, it's dominated by a huge pool of just mom and pop owners, smaller just families. Most don't realize that what they own is underperforming the market. Most are intimidated by rent control, don't see it as an opportunity. They see it as a regulatory nightmare. Most don't have the knowledge or the resources or the desire to want to invest in the properties. In fact, the typical owner here in Los Angeles who's had an asset for 30 or 40 years, oftentimes it's debt-free, the mortgage has been paid off. They want to keep CapEx, capital improvements, as low as possible. They want to keep unit turnover as low as possible. And that's actually a very rational way for they want to run it like an ATM machine and not have any cash flow disrupted. But it creates a great opportunity for a firm like Paladin, who knows how to actually run properties better and increase cash flow. So there's just thousands of these tired rundown properties all over LA. And the typical loss to lease, which is the difference between market rents and current rents, is 20 to 30% or more. Rent control actually contributes to that loss to lease. It keeps the current rents artificially down. We have yet to buy a building that has a RUBS program, which is a way that you pass through utilities costs to tenants. It's the first thing you learn in apartment property management is to put in place a ratio utility billing system. We have yet to buy an asset in LA that has one of those. So it's just another indication of disinterested and unsophisticated management. So that's what one of the reasons we really have decided to just be a sharpshooter in this market. We've invested all over the US in this strategy, and we've seen how different markets respond, and all of the other markets are there. This is a competitive market, not to say that Los Angeles isn't competitive, but there's very few institutional players here. And so who are we competing against? We're competing against mom and pops. And so when a broker, and we have a reputation for protecting brokers, we have a reputation for closing on transactions when we tie them up. So that, back to the integrity issue, we do not retrade. We value our reputation and our brand, and we've earned that over a 30-year period. And so when we may not, and we don't do auctions. If a buying opportunity turns into 24 people looking at it, we say, here's our price, and we move on, because we can't compete with somebody who's has a time deadline to plunk down money to achieve a tax-free exchange. But if a seller wants certainty of closing at a fair price, we are one of the strongest buyers in the marketplace here because of our credentials and the scale of our track record and our institutional credibility.